Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's time for Trader Talk in today's market. I am your host, Kevin Horner, joining you from a beautiful and sunny Denver, Colorado. Thanks for being here today, everyone. As many of you know, it is a solo session today, so I'm happy to have you all here. Thanks for joining. We'll go through, as we often do, the basics of the market. We'll get to a number of key components in our biggest indice groups, obviously, today. Look around at the trend. We had a pretty strong day yesterday on the heels of the government shutdown. We have talked a bit about the seemingly lack of concern associated with the market and the shutdown. Now, that might change if we get to a prolonged period of time for this government shutdown, but for the immediate future, at least, it was one of those deals that seemed to have little impact on the market at all. So we'll see how this looks this morning. Now, you can say hi to Barb Armstrong in the chat today. She's joining me there. She, of course, is a fantastic coach, does an excellent job here, and will do a wonderful job, of course, in the chat as well. Barb and I will be out in Dallas, out in Chicago this upcoming weekend for our Market Drive event. For those of you who are set up and able to attend, we'd love to see you. Make sure you stop by and say hello. And if you're not already doing so, don't forget to follow Barb and me in the land of X, Barb Armstrong CS and Kevin Horner CS. We try to post for you there throughout the week. And a reminder about X, simply put, it's the best way to meet up with us coaches outside of the classes that we offer for you here in the YouTube channel. So with that, let's get to our disclosures and then we'll get into the charts. So please remember that our discussion here is exclusively for your information and your education. Simply put, we do not make recommendations. We do not make endorsements for a specific approach to trading the market. We do, however, discuss technical analysis. We provide information or insights as to ways technical analysis may impact traders' decision making. We also talk about some of the concepts and strategies traders might choose to utilize via that technical analysis viewpoint as well. What we want you to do is simply continue to build your playbook, so to speak, utilizing some of these concepts, and we try to bring those in each day as we review the broad components of the market to kind of help us out a little bit. So as usual, we will maintain a top-down review. So we'll hit up the S&P 500, the NASDAQ 100, the Russell 2000, the semiconductor index, and then look at the sectors on the move today. I've got some sector charts that I found to be a little bit notable over the last few days here as well. And of course, as always, some stocks in the news. So let's get right down to business, everyone. Let's remind ourselves of the move we've seen in the S&P 500, another gap up at the close here. So a couple of trend following details here tell us that there's not a lot of reason for bearishness as it relates to the SPX. We moved through the line I drew in yesterday. I'll go ahead and pull that off and then shrink down a little bit and just remind us of the consistency of our trend. One day below the 20-day for a lot of traders does not make a breakdown. And as you can see, we've had two single sessions below that 20-day. So a lot of traders like yourselves maybe just continuing to monitor the 20, looking for a shift in trend in some way. Haven't seen that yet. We did get the bounce off of the 20-day back here about a week ago. And then now today, having moved through with a slight gap, made new highs. And I mean, if you're looking once more for reasons to be a seller of the S&P 500, the reason at this point to be a seller of the SPX is that you are taking profits and you don't wish to give those back. So the reminder I offer is that as traders, we, of course, need to manage our comfort with our own positions, the size of those positions, the dollars invested, and then do that math to understand where would I make a change? Where would I see a shift to the trend? Some of you would say that's the 20-day. Under the 20-day, you might sell a little. It's about 113 points away from our current price. So 113 points is not a big deal as it relates to a 6,700-point index, of course. So very small percentage. Now down there at the 50-day, it's 64.90. That's more akin to about 230 points of downside. Once more, we got to do the math on that. So, if you're thinking about the 50-day from where we are right now at 67, I'm going to ballpark that at 67.80. The 50-day pullback would be about 3.3%. Okay? So if you're watching the 50 and saying, I would only be a seller under the 50-day moving average, then that means you have to sustain about a 3.3% pullback in price, meaning you're giving up that much in the way of capital or profits, however you choose to look at it. And excuse me, you would be then deciding to sell, meaning you'd have to fall more than 3.3%, and that would then, or further than that, right, closing below the 50-day would then perhaps give traders reasons to be sellers, to then be selling, excuse me. So that's one of the reasons that some traders like to sell a little bit as we move to new highs. It doesn't mean it's the right process for you. It just means that it's a method that some traders choose to utilize. Now, again, I've stated this on a number of instances in this particular show and many others because I'm such an advocate for traders to simply manage their trades in a way that is comfortable for them, reminding us that as traders, we are all very, very different. Some of you are very comfortable holding and maintaining long-run trends like we've seen in the SPX going back to about April 23rd with very limited breakdowns and really no confirmation of a breakdown. Some of you are comfortable sticking with that and holding that every step of the way, and that's great. But there are just as many of you who are not comfortable giving up profits, would like to be a little more actively managing those sales and taking a little off as you move to new highs might be a way of doing that. So as always, do the math, but also have that plan. Know what it is that's going to help you to make a decision in the moment. The worst feeling as a trader that I think I've ever had isn't that I've sold and watched a stock move higher. It's most consistently when this market moves in a manner that I wasn't prepared for. That doesn't mean I'm feeling great when it moves upward and I'm unprepared. I actually dislike that as well because I don't know what my action is. I get a move that I was not really ready for. And even if I'm in the process of benefiting, I'm profiting, I'm making money, and yet because I wasn't prepared for the move, I'm anxious, I'm antsy. I have to quickly navigate and think about how I'm going to address it. So in those instances, even though I'm doing well, I still don't like the way I feel. So planning it out, knowing my actions, knowing the steps I wish to take when I'm put in that position really aids me. It might make things easier for you as well. So again, what I try to offer in our classes here isn't so much tied to my specific approach, but rather that process that I want you to define based on your tolerance for risk, your comfort for being in your positions, and so on. All of that super important for us as individual traders. So lots of good things continuing as we see the SPX just moving to new highs. Remember, as always, price is king here, everyone. So while we are getting the RSI to climb back up into the overbought conditions, no matter what you get from RSI, even if we don't make a higher high in the RSI, price still pushing upward. Remember, price matters most. Okay, let's peek in on the NASDAQ 100. We're getting a decent pop here. We're up about 1/3%, moving into overbought conditions down below with that RSI. And again, showing a little bit of a new level of horizontal support. We had talked about yesterday with Ben Watson, the significant kind of like a month to 2 month long consolidation period in here where we tested horizontal levels and we finally moved through it. Well, we're just stair-stepping upward here, aren't we, everyone? Sure looks like it. And if you're simply put, managing your trades along the trend, the last time we saw the 50-day was right here. Now the 50-day is right here. Again, same thing can apply for those of you who are wondering about management. Do we take a little off? Do you keep pushing? It's, again, up to you individually. Know how you want to act, but some of you would maybe take some off under the 20-day. Some would take some more off under the 50-day. But I'll point out the only test we've had of the 50 was this one back at the end of actually, I guess it was the first trading week of September. So September 2 was a Monday, and it has been wonderful since. I mean, what are you going to say about a market that just seemingly has no give up? So don't fight against it. If you're feeling uncomfortable, maybe the best way to manage that is just to be in a bit more cash than normal. I know I've talked with many, many traders in the last few months who are continuing to say a lot of the same things that are kind of permeating the overall narrative of the market. Well, the market just keeps pushing. I don't know how high it can go. Every dip continues to be bought up. Those aren't really negative assertions. Those are actually what's happening. The question is, can traders continue to participate the exact same way? So remember, if you are a trend trader, which is frequently what we talk about here, right? Working with the trend, looking for stocks and groups that are already making higher highs, higher lows, and then trading that trend for as long as possible. Well, ultimately, that's what trend traders are looking at here, and even the NASDAQ and the S&P is monitoring their positions, working with the trend, maybe getting a little defensive on a move below the trend line, whether that's a 20-day, 50-day moving average, etc., and then kind of thinking about that, right? Do I tighten things up? Do I make that decision based on an intraday move, or maybe I make that decision only based on a closing price, for example? So all the same as it relates to the NASDAQ and the S&P 500, I think. Let's see how our small caps are doing this morning. Russell up about 1/3%. Similar situation here, everyone. 20-day moving average continuing to offer short-term support. We basically tested the 20 for the last 5 sessions, making higher lows along the way. Why is that important? Well, just as a reminder of some of our basic technical analysis concepts, right? Higher highs and higher lows give us an uptrend. Lower lows and lower highs give us a downtrend. When we have higher lows, even if we haven't moved to new highs, what we see is a continuation pattern of trend. And that's what really stands out. Now, as it relates to the 20-day, we have been above the 20 since we gapped up back on August 12. After having been below it for a very short-term period, right? It wasn't very long. It was about 5 to 7 sessions or so here. But this is an excellent reminder of the way some traders might manage such a position, right? You are above the 20-day on April 23rd. You got, this close here wasn't maybe sufficient to kick traders out because it was a weak open that finished strongly. But if you were using a close under the 20-day as a means of reducing position size, you may have done so and been patient, sitting on your hands for about 5 to 7 sessions in here, right? You might have noted that the 50 was crossing the 200 to the upside and taken that as a bullish indication, or taken, I'm going to remove my oval here, maybe even taken this candle as the validation of a support test. It's a bit of a hammer, not necessarily the huge hammer that you're looking for with this tail that really validates a test of support. But some traders might have looked at that and said, boy, that's an interesting spot. And then the very next day, with a close above the high of that low day in the pullback, might have been a signal. Other traders would have been patient, waited for a candle to get through back to the 20-day, right? And still other traders would have said, I'm going to wait until I get a move through. Let me duplicate this line, because I think that this became another ledge, was a break to new highs through former horizontal resistance. And in fact, we got that with this quick 2-day candle move there. And what did we do? What we often do, right? Trends don't go straight up or straight down. They go up and then they breathe. Well, that's exactly what we got in here. We pulled back to the 20-day for a quick test, and we were right back on the rally. So 20-day continues to offer short-term support. Again, some traders might lighten up under the 20. We'll see to what extent that encourages traders to do so if we get a break or a close under the 20. Remember what this banner that I've drawn in is. This ledge are all-time highs in the Russell 2000. If we look at that on the weekly, that banner is essentially my top white line here. And this is a very important level. It is a level from which we could be beaten back. It could act as resistance. Every reason to think as such. So traders who've been participating every step, from back here in early April, you've had exceptional percentage returns. And even if you're not participating since April, where you're up 40%, maybe you're participating since, maybe mid to late May, and you're up more like 20%. Even that is an excellent rate of return for a short-term period of time. And many traders would be looking to at least profit, right? Take some profits and simply say, all right, prove to me that there's more upside here. Show me a legitimate breakout, in which case I will then reapply dollars I've taken off of this position and this trade in the hopes that what we get from that is a continuation move. So that would be one concept that some traders would be looking for. Maybe a little bit defensive in the short run because we haven't yet broken out, but every reason to believe that this is simply a pause as we await a potential breakout. And of course, we've talked a bit about the move lower in rates or yields. We did fail at the trend line last week. Now we're holding the 20 days and we are above the 20-day now. So it remains to be seen whether we are more likely to test the former 4.2% level or the last lows we made just around 4%. Both of those could stand out. And I think a lot of traders would suggest that a move through the 4.2% to the upside or the 4% to the downside is where things would start to become a little more clear in terms of potential moves that the rest of the market might make on a break one way or the other there. One other note. I know I said 4.2. I'm sorry. This is a tracking position. Okay. So remember the rate, the dollar value on that shows us we're currently at 41.15. All I've done is you just move that decimal one spot to the left. That gives you the approximation of the yield. So we're looking at 4.11% on the 10-year yield at this time. I noticed we got a survey there. Thanks, Barb, for reposting that. Of course, always enjoy hearing from you. I really appreciate the feedback. You guys are very, very kind, and I couldn't appreciate it any more. But remember, you can also incorporate your own ideas for this class in particular. The Thursday class where I'm solo with all of you, one of the key details I hear about is the desire to continue trade management. And I have a position we'll look at here in a little bit to discuss exactly that. But remember, your thoughts are appreciated, and I'd be happy to encourage or incorporate rather those ideas into the classes where I can. So utilize that link. It takes all of 60 seconds. You can give a score, or you can make some comments. All those details come to me directly. I'd appreciate hearing from you, of course. Okay, let's look at the semis. Semis are cruising today, everyone. This is significant because that is a gap move yet again. My goodness, look at that RSI getting up there over 80 now. Fantastic development in the SOX once more. 20-day moving average quickly getting caught up, probably too slow for trade management for some of us, because when you see where the 20-day is, we're at 61.67. You got to give up 400 points to the downside to be proven right or wrong. Not everybody's going to want to do that. Some traders might go with that faster 10-day moving average. Notice where that is. It is right now at the breakout level. And so that might make some sense here for traders, right? Looking at about 63.50, a move back below 63.50, suddenly you're back into this range. That might not be as comfortable for some of you. So you might choose to manage positionally against the 10-day rather than the slower 20, and maybe certainly rather than the slower 50. Look at where the 50 is. 50 is slowly but surely eventually working its way up in here. I might actually move this line here now and put it at the top of those peaks, because it is now coincident with the 50, which does maybe provide a little extra confluence at that 5,900 level on the SOX index here, which does seem to be a little strong. Obviously, that RSI validates that. So, I mean, what else are you going to say about a group that's been absolutely fantastic for us? And I drew this out yesterday to highlight the strength, but I'll do it once more. From the April lows to where we are right now at 65.70 or so, you're looking at about a 94% move off of those April lows. That is crazy. That's not bad at all. Fantastic stuff. I mean, what else are you going to say? So, as always, I think the hard thing for traders who've maybe not had the amount of time that other traders have had in the marketplace, it's tough to lean into some of those concepts, like the trend will run longer than you think it can. We have this human nature belief that what's going up has to come down. And the trouble is that when we start thinking about has to do anything, it encourages us to take steps in the market. The thing that I want to remind you all about is that the market doesn't care what you think and what I think, because we are just insignificant minnows in a very large lake. We can't move price, right? The market is always right, and so our job is just to be on the side with the market. So trade with what is working and stay with what's working for as long as you can. And again, where you struggle, work to incorporate some of those steps and procedures and processes that can make it a lot easier on ourselves. So those things become very important to the trader who's maybe even the trader who's comfortable with trend analysis. Doesn't mean you're comfortable with trade management. Make sure you're working to get there. That's a very big important aspect of it. Okay, let's see. Yeah, I'm not sure the time frame associated. I know we've had a change according to the look at how the regulatory bodies are considering pattern day trader trading, pattern day trader designations. Sounds like they're going to be eliminating some of those minimum dollar requirements, which should free up some people. Now that's going to be good for some traders. It could be rough for other traders. It could make things a little bit too easy to be in and out of your positions. But, reminder that the trader's responsibility is to know those requirements, and it might free us up a little more without a $25,000 minimum requirement to be a so-called pattern day trader, which, by the way, the pattern designation comes when you've executed 4 day trades, 4 in and out of the same position over the course of a 5 business day window. So it doesn't take a whole lot in a standard week to be considered a pattern day trader. If you made a purchase on a Monday and sold it a little later because it worked in your favor, great, you took your profits, but you made a day trade. Previously, you've been able to do that up to 3 times every rolling 5 days and not be held to a minimum balance. Well, it sounds like they're going to be eliminating that minimum balance requirement, which might make it a little bit easier, but also that might mean a little bit easier to put ourselves in a bad spot. And so even with changes that could free up traders a little bit for pattern day trading or day trading in general, my encouragement, needless to say, I hope, is to stick true to a process and a plan with which you are comfortable. Don't allow yourself to get head over skis in these situations. I think hopefully that's a prudent way of thinking about things. All right, let's check out what else is moving around in regard to some sector action. We've noted energy is up a little bit today, leadership today for materials. So let's just peek in. We're going to change our moving average details here. So we'll just move our way through. The material group is a little bit intriguing because we are going back to my 1-year time frame. We are below the 50 and the 20-day now. Have been for a bit. So this bears watching. This might be a bit of a consolidation signal now that we're below the 50-day moving average. We were below it for about 7 sessions. So a little bit of a heads up there. Could we find some support eventually in this range? We could, but notice how the 200-day moving average is still downward sloping. It's because we've needed to get this group in gear, and maybe we just need some consolidation after a pretty decent move because, yeah, we did move up collectively here about 25%. Pretty good return on a very tight group otherwise. Energy is up a little here today, bouncing off the 20-day after pulling back. So, hey, this isn't terrible if you're looking for energy. And when I say that, what I mean is we tried to break out. So remember, we ran into the trend line, pulled back from there, got above it for all of a day here and pulled back. But what's notable about this is the pullback just stopped at the 20-day moving average, almost like it got slammed into a concrete barrier there recently, right? Just in the last few days. Now, today, we are now trading above the high of what was this past Tuesday. That was our low day. That gave us the low day in this pullback. And we're now trading above it, what some might call a to hold rather than a ka hold, because we haven't closed yet, but it could be an aggressive entrance for some short-term trader relative to this group, believing that while we've failed last time here at the trend line and pulled back, having made that higher low, maybe a trader says, hey, this is where I want to get started. And I'm going to note, even though I've got this line drawn in, check this out. Going back from the last low, capture this low, capture this low, capture those lows. You could say that you've still got a short-term uptrend still working. So this is kind of intriguing as well. Keep an eye on what energy might be doing here in the near run. We're also getting that Ben and I talked about yesterday, healthcare's improvement. Healthcare having broken with a significant candle yesterday, broke upward aggressively, again, through almost a 2-year. Let's change this once more. Oh, I guess I didn't save that. So we'll make that 2, and there I'll save that with a little star. All right, so now look at that trend. Way back to August of 24. So we're a little more like, I guess, only 13 or 14 months, but a big significant gap finally through that trend line. And now we might have a new zone. So some traders might snap a new line of potential support right in this area. As you can see, we had to get through that area to get some confidence. And now we've had some confidence over the last 2 days. So let's see if that sticks. But that is a pretty intriguing breakout. Would any of you be surprised to see a throwback to the breakout level, especially now that this breakout level has been exceeded with some conviction and we're breaking the major moving averages in here. So we're above all three. You're above the 50, you're above the 20, you're above the 200, you're above the trend line and above the former resistance band horizontally, now support. So you could, some traders maybe put a little oval in that vicinity and say, hey, on any throwback to this might be an interesting spot for a trader to participate. Yesterday, Ben and I talked a little bit about the component makeup within this, the biotech grouping doing well in this space. And as you can see, that looks a lot like the entire sector, right? So this is pretty intriguing as well. Some of you might be looking at that last high that we just exceeded, and you could put a line in that vicinity as well as a potential new horizontal support level. So that might bear watching on biotech. But remember, when we talk top-down method, everyone, there's going to be leaders in your sector. There's going to be laggers in your sector. And so top-down approach might say, well, just as an example, perhaps you're looking at those S&P 500 stocks and you notice that healthcare is making that significant move. Maybe the trader says, well, if I'm looking for trade opportunities, I'm going to look in large cap stocks like the S&P 500 that are in the sector of healthcare specifically, that are also trading at a high over the last, I guess, what would be about 3 months, 4 months, 5 months, validate that in some way. And then what you might be finding are stocks in leadership positions in a group that has just recently broken a downtrend, which may be the opportunity for an entrance into an individual position or even a broader space, a broader group like healthcare as an example only. So again, be thoughtful about your process. Think about that top-down. The reason we talk top-down method isn't because it's clean and easy to discuss. It's because there's a madness to that method, right? There's an actual reasoning behind it, and it's basically searching for stocks in leading groups that are leading that group, right? So be thoughtful about trading leaders rather than looking at laggers. That's one of the, again, general basic concepts of technical analysis and trend trading in general. Now, We also are going to talk about technology, because 2 weeks ago, and again, I realize with my travels, I tend not to be here every single week, but there's going to be some slow periods coming up. So you're going to get me frequently on Thursdays going forward between now and the end of the year. That said, when we were here 2 weeks ago, we were talking about this very brief period where we hadn't broken out of this consolidation. I drew in the downtrend line. I could also draw in a horizontal support line through here that kind of says, well, we really for a period didn't go anywhere, about, let's see, maybe 2 months, right? This was July 15, and then we broke it here on September 10. So almost 2 months. We'll call that 9 weeks. So over that 9 weeks, we hadn't made any higher highs. We had made matching lows. I know many of you heard me say this, matching lows. Matching lows are cool. Lower lows, not so much. So matching lows tell us we validate a level of horizontal support. We absolutely could say as such right here, correct? So we had matching low here, had another one here with a big, beautiful candle, had another one here that held and continued to make new highs. So a lot of validation of that 5,100 approximate level. But when we last spoke, I'm sure, and actually we last spoke on this day here, this green candle day, but ultimately you had 6 days outside of that downtrend line, but we didn't yet go anywhere. And so this is one of those instances where traders are saying things like, well, it's not moving as quickly as I want, but it's above that former downtrend line. You got to take a piece and back out a little, right? And just allow yourself to monitor things sometimes and not take action necessarily. So what was all of this? Nothing more than validation of the breakout, and the speed with which the market moves can't be something that we have to pay too much attention to, because the market, again, is going to do what the market does. We have to recognize that, and we got to be comfortable sticking with what we can. Ultimately, all of this happened because of patience. If you were patient, you let the group move higher. You give it a breakout here. We got a new high yet again, right? Very quick 4-day move. Pull back for 4 days. We're right back on trend. Notice where the 20-day moving average is as well, also providing you an area of potential short-run support in here. So as always, having those ideas, knowing what it is you want to do, should be making it a little bit easier on us as traders, I think. But I found it interesting when I was doing my pre-show work and going back to the class 2 weeks ago that we were still talking about, well, we're above the breakout, but we haven't really gotten back in gear yet. And then that very day, we basically closed at the highs, and then you got continuation, throwback, and continuation once more. So maybe some traders now are waiting on yet another throwback potentially, right? After having made it right here, up 4 days. Now you've been up for 4 days. Are we going to get a throwback maneuver? Or are we going to consolidate? Ultimately, that's probably what traders are thinking about here for tech. Okay, let us take a look. Sorry, everybody. It looks like I need to validate that I am properly online with my work computer here. Okay, I've been validated. Great. Let's take a look at some stocks in the news this morning before we take a look at our example trade in our example portfolio. So this morning we did, I should say last night, we heard from Nike. So let's peek in on Nike's earnings, see how the market is reacting here. So looks like favorable a little bit, at least up about 2.5% based on this maneuver. Kind of slingshotting yesterday. You got a huge hammer candle there. Wow. And then pushing to the upside through the 50-day moving average today here. And some traders put a line up at those prior highs as something to keep an eye on. That's right around 80. So what do we see in here? Well, KeyBank upgraded Nike to overweight from sector weight, and they put a new price target on the stock at $90, stating that the company reported solid fiscal Q1 results that were driven by continued progress on its win now actions, according to the analyst. Now, the firm does acknowledge there are some near-term choppiness likelihood details here associated with tariffs and China specifically, but they feel as though the innovation pipeline at Nike is sufficient and could very well mean opportunity near term as we stand here in Nike. So it's an interesting spot. I think the most notable action of late as it relates to this chart is the rectangular box that I'll put on this price action. Because yes, if I incorporate this little pullback here below the green line, it also seems like it may have tested my downtrend line. We look at this on a weekly chart. We do have some overhanging trend resistance at the 100-week moving average. So that does stand out for some of us. But because the last time we were there, we were there for all of 2 weeks, and then we were right back below it. So you can see that the top of that level at 80 happens to also coincide. Let's take my trend line a little bit to the left. Look at those, same highs, right? Same level. So we can see that there's been some resistance there right at that 80 level a number of times, dating back now to what was essentially November of last year. So almost a full year, and 80 still providing some resistance. So that's going to matter for Nike, as is that downtrend line. And so remember, when you get confluence of information at same levels, it tells us the importance of that level. Horizontal resistance, we've been beaten back from it a number of times in the last year, and we've got a moving average down sloping acting as resistance as well. We have been beneath that 100-week moving average dating all the way back to February of 2022. So that's significant, but remember, that is just as significant if and when it breaks, everyone, right? Because if and when it breaks, well, then what once was resistance can now become support, and now you might have a new uptrend working, okay? As always, we have to be thinking about what could occur. So have a plan in place, know what steps you want to take. Very, very important to process. Now, I saw some requests or comments, rather, that Tesla was in the news this morning. Let's see. I had a headline on that too. Tesla in the news with Apple. Apple having filed a motion to dismiss the XAI lawsuit, which alleges that Apple's ChatGPT integration will stifle competition. It says its plans to integrate other chatbots could be a problem. So Elon Musk's AI startup and his social media platform, X, that is, suing Apple and OpenAI in August. They are seeking billions in damages over their claim that the Apple the iPhone maker, right, of we are all familiar with Apple. They have inhibited innovation in the AI industry is the statement. Now, let's just peek in on Tesla here. Let's see what we got. So Tesla opened well, fading a little bit here, everyone. So you've got a positive open that pushed upward. Now we're down a little versus yesterday's close. And yeah, they did have delivery numbers. Let's see, that should be in my headline. It wasn't in my emails. So there you go. 497,000 vehicles delivered in Q3. That's up 7%. I think that 7% is likely on a year-over-year basis. Let's see. And then on the, 7.4% up year-over-year. Stock gains. Let's look at this on a 5-minute chart, or rather this is a 5. Okay. All right. This is notable because we often will see this, won't we, everyone? We haven't looked at this in a bit utilizing the intra-period charts, but a 5-minute bar telling us that we opened hot, got through R1 on the pivot points, and then got thrown back from 479 back to our pivot at 455. So I'll just be reminding you all of what the pivot is. The pivot point is essentially the price action from yesterday, open, high, low, and close. It's giving us the approximation of an equilibrium price around which traders would expect the stock to trade today. On a short-term basis, the pivot can act as support, and it can also act as resistance. At this point, it becomes a possible support spot, and short-term traders might say, hey, I'm comfortable with the move, even though the stock has pulled back 20 points from the peak intraday. some traders might look at this and say, well, it went to an area that I would have expected it to go to on any pullback, and for the moment has held that area. It doesn't mean it's going to, but some traders might look at this in the short run and say, boy, as long as it maintains the low that we set here, then some traders would say, I can stick with it. And if this is the low of the day, well, then they might be basing any new entry based on a low here and say, look, if it holds and doesn't trade below that white line, then I'll stay with it. And if it trades below the white line, I move on. I set an exit strategy or decide to move on, what have you. But that's how some short-term traders might choose to look at Tesla here. Okay, so we're in our final 5 minutes here, everyone. We need to peek in on our example portfolio. So I'm going over to the monitor tab where we have a position in RTX. Now, we took this position a while ago. Take a quick look at my detail here. We took it back in June. The stock is moving upward nicely. We're up almost 17%. But the reason that we are looking at this one is because the stock has not just continued up, but we have an exit strategy on it. And we've been raising our stops along the way. And the reason we are doing this is that we are allowing the stock to continue to make new highs, and we are trying to manage our exit strategies below major support. In this instance, major support, we're going to call the 50-day moving average, and we're going to then incorporate an ATR, an average true range. And this is how we've been managing the RTX position since we got in it. We've been managing against our preferred level of support. Again, today we're using the 50. So the 50-day is 157.89. And then at 157.89, I'm reducing it, taking a minus by the amount of the ATR. Look down below in the lower left, you'll see it at $2.85. So I'm basically stating we're going to go under the 50-day by that amount, which means 155.04. And because I like to be a little bit more wiggle room, I'm going to come beneath that even still by about 10 cents. So I graduated high school in 1994. So why not 154.94? It seems like a good spot. We're going to go ahead and do that. So I'm going to push my order up to 154, approximately 154.94 if I can. 154.87 is pretty close. Yeah, that'll work for me. So that's going to give us a greater likelihood of maintaining the trade and only unloading, selling, if in fact we trade under now 154.87. So a couple of key components. Number one, we're incorporating the average true range below the 50-day moving average because we want to be taken out with a legitimate break of trend rather than simply some broad market weakness. And the average true range gives us an idea of that. It's the low to high trade, in this case, over the last 14 trading sessions. So it gives us an approximation of what we can expect intraday. Now, the most important aspect as it relates to the stop orders, to remember the stop is simply a trigger. Once it triggers, you get a market order to sell, and that means you cannot define your price in any way. And so while we are working to be sellers near 154.87, there's no guarantee that that's going to be our price. It could be a lot lower than that. If we gapped below and opened, we finished today at 166, but tomorrow opened at 150, well, we're going to execute pretty close to 150, not close to our stop at 154.87. So please keep that in mind. All right, everyone, we're going to go ahead and wrap things there. But as always, love hearing from you. So please take a moment to complete that survey for me. You can click that link that Barb shared a couple of times and just go ahead and get to it. You can do a score only if you'd like. You can also make some comments, but I promise if those comments are made, I'm going to read them. They come directly to me, and I will work to incorporate suggestions where I have the opportunity to do so. Please additionally follow me and Barb on X, Kevin Horner, CS, Barb Armstrong, CS. If you're in the Chicago area coming out to the Market Drive on Saturday, please stop by and say hi. Love to shake your hand. Always happy to take photos with those of you who are interested. But as always, thanks for being here. Thanks for participating in the show, sharing your ideas with each other. It's a big part of what we do here on the YouTube coaching channel. So I hope you all have a fantastic Thursday. I look forward to catching up with you all again real soon.